So this is a question that has puzzled both traders and investors in the stock market for a long time. And the question is, why do stocks go down after beating earnings? So on the surface, it looks like good news. The company is doing better than expected. So why do prices tend to go down? Now, this is a question that many analysts over the years have tried to answer. However, there isn't just one definitive answer. So in this video, I'm going to go ahead and provide some of the most common reasons why stocks tend to go down despite having a good earnings call. With that being said, guys, my name is Justin from Push and Profit, and make sure to like and subscribe to this video if you find any of the content in this video helpful. So one of the most common reasons why a stock may go down despite, the company beating earnings or having a great earnings call could simply be because of lowered guidance. So this is when a company has a strong quarter. However, during that earnings call, they mentioned that future sales and expectations may start to lower, right? And so one example that I think you guys could wrap around your head to get a better idea of this would be companies that really excelled during the pandemic. So think of companies like Zoom, right? During the pandemic, maybe during one of their earnings they beat it because a lot of people were using their services. However, in one of those earning calls, they might have mentioned that during the future, the next few quarters, as the pandemic was slowly phasing out and as restrictions for COVID were kind of getting more weakened, more and more people were going to be heading out and not really be using the services of Zoom. More and more workers were going to be returning back to work. Another example could be Peloton stock, right? This is a company that during the pandemic, of course, while gyms were being locked down and there was a lot of COVID restrictions, a lot of individuals were making purchases. So maybe during one quarter, Peloton had a maximum amount of sales going on, beating expectations beyond their thoughts. But in that earnings call, they may have mentioned that as restrictions get weakened and loosened and more individuals start heading out and gyms open up, that possibly the sales may start to fall. So I think that's a great example to kind of, really wrap your mind around lowered guidance. We may have one quarter that does really well, but mention that the future quarters may not do as well as the performance from the quarter that did well. Now, another common reason why a stock may go down after a company beats its earnings or has a good earnings call can simply be because of profit taking. So this is when traders and investors fear that other traders and investors are going to be selling their positions in order to lock in profits, so they end up selling themselves, right? So with all this going on in this market psychology, it causes a lot of selling pressure, causing the price action of the stock to go down. And so, many traders and investors may say, well, I'll just go ahead and lock in my profits, and as it goes down, I'll just go ahead and buy the dip, or I'll just lock in profits and move on to another stock. So it could honestly be another, reason, which is just profit taking. Now, the next common reason why a stock falls after a company beats its earnings is actually one that I think a lot of people actually overlook. But before we go ahead and talk about that one, I want to bring you guys the sponsor of today's video, which is myself. So if you guys don't know, I do have a trading program. It's a Push and Profit program, and essentially it's a program that is designed to expedite the learning curve that comes with trading. So if you guys don't know me, I have been trading and investing in the stock market since 2016. And since then, I've learned so much. But at the end of the day, there's still a lot that I am continuously learning. And so I think a lot of people, when they first enter into the stock market, they kind of believe that they know it all. And then they kind of get burned out after not knowing this or not knowing to know about this. And so, the whole purpose of the program is that, I'm providing my experience and what I am continuously learning. So the program does get updated. At the moment, you'll be able to get over 5 hours of video lesson libraries from me personally. But at the end of the day, it could honestly go up to 10 hours as I may be adding more and more content as I continuously learn as well. Now, along with that, you also get to take part of our daily briefing. So essentially, the daily briefings are where I debrief in the morning of what's going on in the overall market. What stocks should we be looking at? What sectors are, something that we should keep an eye on? What are the global conditions that could impact a particular stock? So you'll get to take part of our daily briefings and also be able to message me directly and also talk with any other trader or investor that has also purchased the program as well. So it's essentially a higher quality chat room. Now, why do I say it's a higher quality chat room? Well, if you ever been part of a Facebook group that is free, or some type of forum like StockTwits or Wall Street Reddit or Wall Street Bets on Reddit, you'll notice that there's a lot of individuals that kind of come from different skill levels, right? And there's a lot of noise. You have people that say things that are honestly ridiculous. And so the whole purpose of the chat room that you'll also be able to take part in with the Push and Profit program is that you'll talk with other traders that have went through the structured material. So you're not going to most likely have people saying crazy stuff because they already went through the structured material of what was in the video lesson library, right? So again, I don't know if you guys have ever had the experience of going to a free public forum and hearing all the crazy stuff that people say, but with the Push and Profit program, along with being able to message me, along with being able to take part of the daily briefings and getting the video lessons, you'll also get to message other traders that are more likely going to be higher quality candidates when it comes to talking about the overall market. And with that being said, there's also a coupon code that you guys are going to be able to use in the first link in the description below. And that coupon code is 75 off. If you simply enter that code or simply click the first link, you'll get $75 off the program. So definitely check that out. And with that being said, let's go ahead and go back to talking about why stocks fall when a company beats earnings. So another variable that I think a lot of people overlook is the aspect of liquidity, right? So generally speaking, when there is a good earnings call, right, hedge funds have the opportunity to exit their positions, right? Which is going to cause the stock price to fall because obviously hedge funds and institutions, they are trading big money, right? So the reason why they are able to exit their positions when we have these earnings call is because generally speaking, when there's an earnings call that is good, right, and a company beats its earnings, a lot of buyers are going to pop into the market, right? And so that's a lot of volume with people buying. And so with hedge funds, they're able to offload their shares and start selling, knowing that people are going to buy those shares. And then of course eventually there's going to be a price level where there's more selling pressure going on, and that could cause the stock to go down as well. So this is another aspect that a lot of people may again overlook, but definitely something to consider. So if you guys like this video, again, make sure to hit that like button and subscribe. And before you guys go, I need you guys to watch this video over here because this is another great video if you guys want to learn more about trading. With that being said, guys, I'll see you guys on the next video. Take care.